All right, good morning. Today is Monday, October 30th, 2023. The markets have opened. They have opened strongly to the upside. Lots of green on the screen, so it's a great start to this Monday morning. This past week, I hosted our in-depth monthly client check-in that we call our Capital Markets Update and Outlook. This is your opportunity every month to get an objective and balanced view of where the weight of evidence says the economy and the stock market are headed. This recording is now available on our website. Just head on over to our website, go to the events page, go to the Capital Markets Update and Outlook page. You'll see the recording is available on that page, as well as a nice 2-page summary. You can just click on that button down there at the bottom of the screen. And then also, we love fielding your questions, so please do not hesitate. If you have a question, feel free to use that button. Feel free to shoot me an email. We would love to follow up with you and answer any questions that you may have about the stock market or otherwise. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Amid a busy week of corporate earnings reports, stocks slumped last week on cautious earnings guidance, fears of higher interest rates, and growing anxiety over the increasing amount of Treasury bonds and notes coming to market. The Dow Jones Industrials Average dropped 1.88%, while the Standard & Poor's 500 declined 3.29%. But the NASDAQ Composite Index gave up 4.48% for those 5 trading days last week. And the MSCI EAFE Index, which tracks developed overseas stock markets, retreated 1.82%. Stocks continued their slide last week despite mostly better than expected earnings results. While earnings surprises were generally positive, investors were troubled by declines in year-over-year net profit margins and tepid earnings guidance. Particularly hard hit were technology companies following mixed earnings results. Economic data released on Thursday showed remarkable economic strength with above consensus forecast growth in third quarter gross domestic product, or GDP, and September's durable goods orders, with only a minor uptick in initial jobless claims. The results fanned worries that the Fed might need to hike rates further, or at least maintain high rates for longer. The first read of third quarter economic growth was a blowout, with GDP increasing at an annualized rate of 4.9%. This pace was well ahead of the prior quarter's 2.1% expansion and above consensus forecasts. Powering the third quarter's economic performance was strong consumer spending and inventory buildup. Durable goods orders jumped 4.7% in September, confirming the nation's continued good economic health, easily outpacing the 0.1% rise in August and economists' forecasts of 2%. Meanwhile, initial jobless claims slightly increased, suggesting that the labor market remains healthy. You may have heard the idea that the Fed is trying to thread the needle with the economy by raising interest rates to slow growth, but not cause a recession. Well, we're at crunch time with that plan. We're at the point where the thread is passing through the eye of that needle. Fed Chair Jerome Powell has said one more rate hike may be necessary before the end of the year. But as you can see from this chart, market participants are calling his bluff and anticipating no more rate hikes, no more rate increases this year, 2023. For reference, the Fed's current target rate is a range of 5.25% to 5.5%. In fact, so are other voting members of the Fed's Open Market Committee, which decides on rate changes. Atlanta Fed President Raphael Bostic recently commented that he does not see the need for more rate hikes. A short time later, Philadelphia Fed President Patrick Harker said he thinks the central bank can stop raising rates. The October inflation report did not appear to clarify the rates inflation economy debate, but the report did add a bit of confusion and the delicate balance the Fed is trying to maintain. The September Consumer Price Index was a bit hotter than expected, but the devil is in the details. For example, the CPI showed a 51% annualized increase in hotel prices. The month before, hotel prices showed a 43% annualized drop. So the headline CPI needs to be taken with a grain of salt. The Fed has 2 meetings left this year, one this week and one later on in December. Let's hope that Powell and crew can see through that confusion caused by some CPI inputs like other lodging away from home, including hotels, and reach a consensus on what's next for rates. As always, we will continue to keep our finger on the pulse of what's actually going on in the markets. This week's key economic news that we're watching, number one, first and foremost, that Fed announcement, that FOMC rate increase, rate pause, rate, whatever they're going to decide, announcement on Wednesday. We also have ADP's employment report, the Institute for Supply Managers or ISM's manufacturing index, and then a job openings and turnover survey or JOLTS report. Thursday, we have factory orders and jobless claims. And then Friday, we're looking at the employment situation as well as ISM's services index. With SmartMix, our personalized approach to fiduciary investment management, we primarily invest in individual stocks, cutting out the many hidden costs that can be found in today's investment products. Some of those individual companies that we are watching this week as earnings season continues, another busy week. I won't read them all off, but you can see another busy week of watching those companies and their earnings as they are released. So if we are not investing your life savings for you, you can learn about our low-cost, fully transparent, and personalized approach at www.smartmixportfolios.com. That's it for today. Thank you for staying until the end. I have another riddle for you. Again, be the first person to post the correct answer to this riddle down below this video in the comments section on whatever social media platform you're following me on, you're watching me on, and we will send you a gift card for coffee on us. And I have to congratulate again Roger in Eden Prairie for correctly answering last week's riddle. Roger, thank you so much for your participation. Roger has given me the permission to challenge everybody else to beat him on these weekly riddles. So I don't have an answer for that challenge quite yet, but I will come up with one in the next couple of weeks here of what beating Roger and what award that and reward that may mean for you guys. So again, Roger, thank you so much for your participation. You did get last week's riddle correct. Watch your mailbox for another coffee card. All right, so let's pull up this week's riddle. This week's riddle is, what 3 numbers can you add together and get the same result as when you multiply them? And a little bit of a hint, all 3 numbers are whole and positive, and none are double digit. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you like the answers to previous week's riddles, you can head on over to our website /riddles to get those. And then lastly, later on today, I will be sending out our full update for the week. This update includes more than what I talked about here this morning, including our very popular weekly tax tip. This week's tax tip are rules for home office deductions. So if you work out of home, if you have a home office, you're going to want to pay attention to this week's update. So again, send that out about 3 o'clock Central Time. If you're getting that, you'll see that come through. If you're not seeing it, but you are subscribed, check your spam box, check your junk folder, and make sure to safe list our email. And if you're not getting that email and you would like it, you of course can subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.